Alright, welcome back to another episode of me discovering a strategy that makes me millions and millions of dollars. And in today's episode, I am finally reading Price Action Live for the first time since I started studying ICT concepts 2 months ago. So I've just been doing intensive study every single day, learning ICT concepts, and now I'm finally applying it. Now I'm actually reading Price Action Live for the first time ever. And ICT specifically outlined a process on how to do that, and I've been following that. Well, I tried it for the first time this morning. So here's what I'm doing. Let me explain this. Okay, so this is what he outlined. He said, you need to do this, this, and this, and this. And if you want to be great at something, you have to find somebody that's great at what you want to do and do exactly what they tell you. So that's what I'm doing. He has 30 years of trading experience. He's made a lot of millionaires from trading, so I'm doing everything that he tells me to do because I want to be a millionaire trading. So this is what I'm making note of. The time I discovered the setup. When did I discover the observation? The time delivered. How long did it take to deliver to the objective or stop me out? Speed. How long did it take to move in my favor or stop me out? And distance. How many handles were delivered to the objective or taken in a stop out? So this is all just hypothetical. I'm not actually placing any trades. And what this does is this gives me a baseline for my skill set. It tells me how good I am at reading price. So these are the statistics that I am tracking. It's also going to build me a basis for my trade model as well. And what this does is this fights off the urge to want to get back into the markets and trade live when I haven't mastered reading price action, because I can see that I'm statistically improving if I look at the stats, because over time they're going to get better, right? Over time I'm going to get more observations right than wrong, and these numbers the amount that I get right will surpass the amount that I get wrong. And that shows me that I'm statistically improving without even having to actually place any trades in the market. So the whole point of this is to learn how to read price action the right way. And then once I see that I'm statistically improving and the amount of observations that I get right consistently surpasses the amount that I get wrong, then I will go into demo trading. So I'm just doing everything that ICT outlines in the 2024 mentorship, submitting to the process, because finally slay the ego, I guess you could say. I'm not in a hurry to get back into the market. I'm not in any rush to try to get back in there and make money, because the irony is that if you go into the market trying to make money, well, you're not going to get money. You're going to get your ass handed to, because you're trading with an ego. You're trading out of the desire to make money. So I learned that lesson the hard way. And also an important part is also taking out the time element. It doesn't matter how long it's going to take you to get there, because you don't know how long it's going to take you. And that was something that I used to struggle with a lot. I used to count the months and the days that go by as I was going through my trading process. And I thought because I had a certain amount of time under my belt, I would make it as a trader. So I literally counted the months as they went by. It was like month 5, month 6, month 7. Okay, am I going to make it now? Am I going to make it now? And they just keep going on and on and on, and still haven't made it. And that is just devastating, especially as I don't even want to say like a younger kid, because this was only not even 2 years ago, but I was younger back then, and I feel like I've matured a bit more since then. And I finally submitted to the process. I slayed the ego. I'm not in any rush to make money because I know it's going to come regardless, and I'm just doing things the right way, and that's all I ever want to do. So in this video, I'm going to go over the observations that I made today and what they looked like and what I was seeing at the time. So I start reading the market at 7 o'clock in the morning. This is the start of the New York morning session. So I delineate that time period right here, 7 o'clock. And what I'm looking for is simply a smooth area in price to form. So that's it. Where the market is smooth, that's where it wants to go. And where the market is jagged, that's where it's gonna move away from, right? So starting at 7 o'clock, my first observation was at 7:36, and this one was kind of stupid. This one was really stupid. I don't understand what I saw here. I wanted to see if price could deliver to these highs, but in order to deliver to these highs, in order for me to even consider a setup, I need to see some form of a stop run. And I recorded my observation right here, right? At 7:36, I don't see any stop run in here. I mean, there's really nothing that validates a trade idea. And here, what I was thinking at the time was, I was seeing this down close candle, the open price of this down close candle, be respected. So I was saying, okay, that's a bullish order block. And at the same time, the consequent encroachment of this wick was also being respected. So I thought, okay, we have this bullish order block that's being respected. So is the consequent encroachment of this wick. Now I want to see a price can potentially deliver to this high. And obviously you can see that it did deliver to that high, but stopped me out before doing so, because my stop loss would have been underneath the short-term low, and this would have been a, let's just say at the open price of the order block, like that, which is 7 handles, which isn't even enough range. ICT outlined in the mentorship that in order to record an observation, we need at least 20 handles of range. So this is my very first observation, which makes sense. As you can tell, it looks like my first observation. I don't really know what I was thinking here, but yep, that's it. That's what my first observation looks like. And I like making these videos because in a way it's a journal for me, because I'm going to go back when I'm a multi-millionaire day trader, look at this video and think, wow, that's how I used to read price. And yeah, this is my very first observation that I've ever made studying trading ICT. So that's it right there. First observation, and I stopped out in what, 2 minutes, 3 minutes. It moved, never moved in my favor at all, and it just immediately, boom, ran to stop. So if I were to anticipate a run to this high, what I would want to see, correcting this in hindsight, would probably be some measure of a stop run down here, probably revisit the NWAG low, show willingness to move off of it, and then trade here. But this action right here is sideways. It's very balanced. The ranges are overlapping each other. There's no separation in the ranges. It's just back and forth, back and forth. So it's like, why are you even trading this? Which is good. I think it's good to start watching at 7 o'clock in the morning, because you'll get this type of action and you'll know what bad action looks like, what action I want to stay out of. But this is my first observation. Pretty shit, as it should be. It's my first one. And my second observation is at 8:35. And this one, I was kind of chasing a bit, but see, it was like right here. Okay, this is what I was seeing at the time. These are relatively equal highs. The market runs that, so I guess at this point I'm thinking the market is trading above relatively equal highs. What does this look like on 15-minute at the time? I think a big lesson that I learned today is these lower time frames are subordinate to the higher time frame. So in order to navigate that lower time frame, I have to know what is going on that higher time frame, because if I don't, I get lost, because the algorithm cycles through the time frames up and down. It's referring to things on the higher time frame down to the lower time frame. And if you look right here, see, this is that price action that I recorded my first observation in. It's choppy. It's really shitty. And then we leave that. So we're running these equal highs in a way, I guess you could say. So at this point, I think what was going through my mind was I need to see some sort of a sell scenario for me to get short and target these lows down here. So that's what I was thinking at this point. So at this point, what I was looking for was a breaker formation. I was looking for a fair value gap to get inverse, and then see the market trade back up to that, see that act as resistance, and then make a run on these relative equal lows, but never really quite got that. So here's where I have my first observation right here. Right, this is my first attempt, hypothetical attempt at a short right here. My first hypothetical attempt at a short here. I saw the market breaking down. I noted this volume imbalance, inverse fair value gap right here, right? We close below it, not really. What I wanted to see, this is what happened. I wanted to see, and this would be marked up here because there's a volume imbalance. I was looking to see this get inversed, the market come trade back to that, tap this IFVG, and then run on these lows right here, down here. But it started fading away from the inverse fair value gap, and I thought, I guess this was kind of a scenario where I was chasing the market, because I saw this never really came back and tapped the inverse fair value gap. Well, I think I considered this that in the moment where it opened here, traded higher, opened here, traded higher, and then closed down here. So I thought at this point it was using it as resistance. Not really the case. Here it is, and that's another observation. But at this point it was fading away from this candle. I don't even know what I'm talking about right now. I got a lot of work to do. My mind is fried right now. I've been reading price action and watching a 4-hour ICT YouTube video and taking notes for the last 6 hours. As you can tell, my mind is kind of running a blank. But I have to get a video out every single day. So no one's going to watch this anyway, so it doesn't matter. Just remind myself that. Well, if I say no one's going to watch it, then no one's going to watch it. So why would I want nobody to watch it? But anyways, basically in this observation number 2, I'm chasing the market short in this volume imbalance right here. Never moved in my favor, stopped me out immediately. Because if we look to the left side of the chart, what do we see? The market's trading right down into a buy-side imbalance, and it touches the upper quadrant, stays in the upper quadrant, so then we need to move off of that to go rebalance this. I don't know, maybe tap this order block, maybe trading to this wick. See, I feel like my understanding is still novice, very novice, as it should be, right? Because I'm just starting. So I'm debating on, do I continue to tune into ICT's live streams every single day, or do I begin to study price action live? But really the best way to learn this is by watching price action live, and he even says it himself. So what I'm doing right now is reading the tape, and then I'm going back later in the day and watching his live stream. But this observation is just chasing the market short. Never moved in my favor, stopped me out immediately, because I saw it breaking down and fading away from this. What I have to realize, though, in these types of setups where we have the break formation, the market will refer back to that first inverse fair value gap, which would be right here. And it does that. And so here's where I had another observation. We came in, tapped this, and kind of closed right here. I thought, okay, another hypothetical short entry with a stop, a couple ticks above the inverse fair value gap, and I'm going to target these lows down here. And so at this point, you know, at some point these candles were bold up close candles. They look scary, right? Like they're going to go hunt my stop. But look what they do. They respect the inverse fair value gap and they stay outside of them. They close outside of them, so that's good. So I made note of that. And then that was followed by these strong down close candles. So at this point I'm thinking, okay, this looks good. But we come back into this buy side imbalance and we spend a lot of time down here. So that tells me the market is not in a hurry to take out this low, right? And because we spend a lot of time down here, if you don't see speed and aggression through this, it's not a good indication that I'm going to see a lot of continuation in this move. And what I end up seeing is one little tiny poke below these relative equal lows. We still close within this buy side imbalance, and then it runs for my stop. So that was the third observation, which if I took a partial here, I got right? Which hypothetically I would, which was 12 handles or something in my favor. So I guess you could say that is the first observation that I got right, even though I stopped the remainder. I stopped out on the remainder of the position, and we never delivered to these relative equal lows at this point in time, but we did actually end up doing that at the 9:30 open. So I knew where the draw liquidity was early on in the morning session, but I couldn't find a way to approach that bias or how to trade it. So my logic, my thought process as to why the market would trade back to these 7 o'clock lows was that before the 9:30 bell, predominantly most of the market's being made on the long side, right? We have this extended move. Most of the money's being made on the long side of the market. So what does the market want to do? It wants to put participants in max pain. It doesn't want anybody to profit. So at 9:30 they sink it lower, run out all these longs. They clear the board, and then that's when they send it higher. So this was a really good day for the bullish Power 3, which ICT outlined in the stream. But I did get that logic right. I stated I wanted to see a run on these relative equal lows and then begin to fade to the old high on a daily chart, which was right here. I deleted it, but I had this line marked right here. I swear, I promise I did. I'm just kidding. It doesn't show. That should be showing. Okay, whatever. Oh, there it is. So, because most of the money has been made on the long side of the market, I wanted to see the 9:30 open trade lower, clean out these lows, and we also have smooth lows here and here, and kind of, yeah, right here as well, right? And that's where the market reaches down into. We don't take the London low though, but we cleaned out all the longs, right? And then the real move of the day begins. We trade below the 9:30 open, form a good long scenario, and then trade higher. So that's what I was looking for. So I got the draw on liquidity right. Just finding an actual entry mechanism, a way of getting into the market, was off. And I also noted these relative equal highs, and I noted this stop run. And because we run these relative equal highs, what's next? This area's price was smooth, made jagged, so what's the market going to do next? It's going to attack an area price that is smooth. So I saw this stop run, but I wasn't seeing how could I potentially get into this trade. And so no observation was made here, even though I was well aware of this stop run and that we have the potential to revisit these equal lows down here and maybe even this low. I just didn't know how to get into the trade. I maybe could have gotten an entry, a hypothetical entry on this order block right here. This is that last up close candle that runs out the relative equal lows. That's kind of a high probability order block, right? We also have a sell side imbalance right here, which if we look, that's respected, right? And if we look left, we could potentially use this wick as well. This premium wick is respected. And there's also an S&T divergence, right? So we do not reach the consequent encroachment of this wick, so that tells me the market is weak. So there's another factor there as well. And if I were to pull up the S&P 500, at this time, or was it here? I think it might have been later in the day. Shit. Hold on. The S&P price action is just disgusting. Right here. Right there. So it's very subtle. But we can see that ES is taking this high and NQ is not. So, a small little crack in correlation there. So, look how the bodies of the candles respect this sell side imbalance. So, see the mean threshold of the order block is also respected. Barely colors outside the lines. Not necessarily respected there. So no observation made there, but looking back at it in hindsight, maybe I could have had a potential observation there. $9.44 I had another observation, which was basically just off of the order block right here. Because at this point, what I was thinking was we cleaned out those lows, right? Now I'm thinking we come and clean out these clean highs up here. This was a clear area of buy-side liquidity that we actually ended up revisiting later in the session. But a new approach that I'm going to use tomorrow is not trading until after the first 30 minutes of the market open, because it's forming that opening range, right? And from 9:30 to 10 is usually when we see that fake move where it catches a lot of retail traders offside, and then the real move of the day begins, which is exactly what happened here, right? I mean, I'll admit it, I'll be honest. At this point in time, I was thinking the market is weak and wanted to go seek these lows down here. When I saw this from 9:30 to 10, when I saw this, I was thinking, okay, this thing is weak. It doesn't want to go back up here. But really, what it was doing was making this smooth area price jagged, leaving this intact, priming these highs because we trade up to it, turn away from it. So that makes retail trust in this area of price as resistance, which engineers more liquidity. This relative equal high is still valid because we can look at the bodies of the candles. This one is lower than the one on the left, although it wicked above it. We want to look at the bodies. We just have that small little poke above it, and we have a high here as well. So this is very smooth. This is very smooth. This is no longer smooth. And plus, I had a bullish bias coming in today, because we were drawing to that old high on a daily chart. And we also have these relative equal highs up here. So that was the bias. And we can also derive a bias by just simply studying what does price do after the 9:30 opening. It takes sell-side liquidity out of the marketplace first. So then what is it going to do? Go and seek buy-side. So this entire range, right? This is our Judas swing below the 9:30 opening price. And that itself can give us our bias for the daily range, which clearly played out. Look at the market close. Nice price action. So initially when I was studying this, it's my first day doing this, I thought all this was just noise. I couldn't really read what was going on. Even though I know where these points of interest are, I know that that's my draw on liquidity. I, for some reason, couldn't frame narrative or bias around that. But now I'm thinking a bit more. So yeah, this observation was stupid simply because it's too early after the 9:30 opening. Many times after that 9:30 opening, 9:30-10, that's when we get our fake move. And this was a fake move, right? It wasn't the real move. The move to the downside was a fake move. All this was fake. Opposite of the real move today. So I got that observation wrong. But if you think about it, I could have taken a partial right here at the NWAG high. So at this point I was seeing this sell side imbalance inversed, this buy side imbalance left open, breakaway gap, so it could indicate a potential directional move. And I was thinking we seek these highs, right? Because we ran this out down here. So that is what I was looking for. Not necessarily in my quality long setup, although I don't really know what that is right now. I'm still discovering that. And then at this point, I had an observation from here back on So I noted this as a key imbalance. It's kind of keeping on a lid on price, right? I'm kind of talking in my old retail lingo that he's talking when I traded order flow and supply and demand and all that. But once we are able to actually inverse this IFEG and we see it supported, the consequent encroachment of it is supported, and I also see this buy side imbalance is respected in the upper quadrant, so that indicates strength. Then the market trades higher and seeks these relative equal highs. So I was anticipating, after seeing this supported, after seeing the upper quadrant of this left open, I was looking for delivery to the relative equal highs, and that happened very, very fast. So that was an area to buy and hit that. We did all the damage down here. Now the market wants to go seek the next area of price that is smooth, which is simply these relative equal highs. So that one was pretty easy. And then I had one last observation. Is this a 50-minute? Yeah. What the fuck was it? It was off this right here. Right there, right? So we're reaching the consequent encroachment of that wick. And price rejects it perfectly, begins to fade off of it. That's basically it. So we have this. Imbalance is inversed. We close below it, trade back up into it, reject it, tap it again, reject it, tap it one more time. See how price begins to stay in the lower quadrant of it. That's what I want to see. And we have a close over these down close candles. So I guess you could say that's changing the state of delivery. Still working on that. And then I was going to see if price could deliver back down to this breakaway gap. And it did. So those are my observations for today. My first day reading price action, and I'm going to do another video on this tomorrow, recapping the observations that I recorded there again, because it's good for me to go back at the end of the day and just review these things. So a couple things I'm going to do tomorrow. Number one, I'm including the opening range gap. That's essential to my analysis. Number two, I'm not going to be hunting any kind of observations or hypothetical setups until after 10 a.m. From 9:30 to 10, I'm not going to be looking for any setups. I'm just going to read price action and think who's in the crosshairs, who's the market taking out of the marketplace, who's been making money, right? Because if we look here, prior to 9:30, the prolonged move was to the downside from here to here. So if you're in the marketplace short up here, you're happy, right? You're in profit. You're making a lot of money. Well, sucks for you. That's not the real move of the fucking day. So we have our 9:30 Judas. I want to sit out that first 30 minutes of the open and study what the market does. I want to watch that Judas swing form and think more in terms of power of 3 as well. So thinking in terms of power of 3, looking for the Judas swing, not trading from 9:30 to 10, waiting until after 10. Include opening range gap. And then I also want to be more aware of my draw on liquidity. Just define it and stick with it. Because I noted these highs, but I forgot about them and just kind of blew them off. So that's what I'm going to be working on tomorrow. This is my first review of my observations. Eventually, this will be a trade review thing once I get into demo trading, which probably won't be until I don't know how long, because I don't know how long it's going to take me to master this. But once I do, I'm going into demo. So anyways, this is the first episode of me recording my observations, and that's it.